Welcome back. For Indian markets, 2023 was also the year of the IPOs. And the numbers explain the frenzy. Nearly 50,000 crores was raised by way of IPOs, of which more than 20,000 crore was fresh issue. Not just that, we've seen so many blocks, so many QIPs, PEs have been exiting many of the stocks in which they've been long-term investors. And another way to gauge the metric is the kind of subscription that we've seen for these individual issues, whether it's a Tata Tech or a DOMS, IREDA, and many of them have seen some bumper listings on day one. To talk about what we've seen in the year gone by, 2023, a rewind, a look ahead into 2024, we've got the Managing Director of Prime Database, Pranav Haldea. Pranav, first, you look at the numbers very closely, and you've been doing that for a very long time. Tell us, how would you gauge 2023 in terms of IPOs, the kind of interest that we've seen from retail participants?
Well, thanks for having me. I think a few points stand out about 2023 in particular. One, you already mentioned in terms of the fresh capital being raised. So the overall issue amount you saw, 42% was towards fresh capital, which is actually the highest in about 8 years. So I think that shows that a lot of money is being raised by companies, which is going towards growth, towards expansion, towards diversification. Second of all, what you've also seen in 2023 is in terms of broad basing of sectors. So unlike in the past few years, wherein you've seen IPOs primarily coming from BFSI sector, I think one of the standout features of 2023 has been in terms of the broad range of sectors from which you've seen companies, including a lot of manufacturing companies as well. And finally, I think the other interesting aspect about 2023 has been just in terms of the size of issues. If I look at the average issue amount for 2023, it's at about 900 crores, which in comparison to the previous year, which was at 1,500 crores, and the year before that at 2,000 crores. So I think what you're seeing is that, smaller companies are coming to the IPO market, a larger set of companies are coming to the IPO market, and a lot of these companies are not necessarily coming to the market to raise a lot of money, but primarily either to provide an exit to the promoters or selling shareholders, or primarily just to get listed. So I think these have been the standout features of 23.
Okay, that's interesting. Pranav, something else that also stands out to me, hi, this is Pavitra, is that mutual funds via anchor investments have contributed a large chunk, right, to this. We've seen the kind of money that they put into names like Tata Tech, Honasa, a bunch of them. I was looking at it, it's more than what the FPIs have put in for a second straight year. Take us through your reading that as well, and some of the numbers there too.
Well, absolutely. I think the other feature has been in terms of participation from domestic investors, whether retail or institutional as well. So on the retail side, you've seen huge amounts of oversubscriptions in issues. On an average, I think retail has oversubscribed by 23 times across different issues. And even as far as institutional investors, you're seeing huge amounts of money coming in through SIPs to mutual funds, and you're seeing that money getting deployed in the IPO market as well. Unlike in the past, where there was a lot of dependence on foreign portfolio investors for IPOs, I think that's been a big change this year. And that kind of comes in with the smaller issues that I spoke of earlier as well. So for a lot of these smaller issues, the dependency on foreign investors has come down considerably.
Is there any way to find out what was the FII interest in these IPOs? Because the amount that's been raised, 50,000 so far, is less than what the IPO markets raised last year or in 2021 or even in 2017. So it's not that the amount raised, stands out this year. It's just the retail participation, the domestic interest. So are there any numbers to corroborate that?
Well, so you're absolutely right. So in comparison to last year, in terms of overall amount raised is lesser, but of course we have to remember that last year you had a mega issue of LIC, which was in itself 20,000 crores. If you exclude that, then the amount raised this year is much higher. Likewise, in 2021, also you saw a few large issues. Paytm, Zomato were two standout issues of 2021. which kind of skewed the issue amount upwards. And like I said earlier, that this year you've not had very large IPOs. In fact, I think the largest IPO was around 4,000 crores, and not more than that. So you are seeing a lesser number of issue amount, smaller companies which are coming to the IPO market.
Oh, absolutely, and that's also the reason why the average size this year looks a little bit smaller, right? Because you did have LIC alone pulling in around 4,300 crores via its issue. But Pranav, take us a little bit back in time. What normally happens at a time when you see this kind of IPO frenzy, where the bunch of small companies are hitting the street, most of them getting heavily oversubscribed? How does it move from here? When the markets, if they do take a breather, is there a sudden sort of pause that comes through in the primary markets, or how does it pan out usually?
Well, so a couple of points. So one is that, the kind of frenzy that you are seeing right now is not something which is just relating to 23. You saw a similar frenzy in 2021 as well. Of course, you had a bit of a breather in 22, but in 2021 as well, in terms of number of applications coming in from retail, or the times of subscription, was even higher than what you've seen this year.
That would also be because of the post-COVID situation, right? I mean, a lot of them just hitting the street together.
Well, yes, and you always find that. You are seeing that a lot of IPO activity gets bunched up. Look, historically, we have to realize that the primary market follows the secondary market. And whenever you see the kind of bullishness that you're seeing right now in the secondary market, you always find that the primary market follows, albeit with a bit of a lag, around a 3-4 month lag. Even this year, you've seen that, after the market hit lows in March, you had a bit of a quiet period, but then from June, July onward, you started seeing primary market activity picking up. So this is something which is, stayed consistent all throughout. And my sense is that, especially after what you've seen recently in terms of the state election verdict, the signals from the Fed in the US, I think secondary markets continue to be bullish, last couple of days notwithstanding, and, whatever fears are there with the new COVID variant. But, if you see this kind of bullishness continuing in the secondary market, you will see more issues in the primary market space as well. The pipeline has been exceedingly strong all throughout. Even right now, as we said, there are about 27 companies which have SEBI approval, which are looking to raise 30,000 crores. And another 30 companies which have filed with SEBI for approval, which are looking to raise 34,000 crores. So there is no dearth from the supply side. And clearly, what you're seeing on the demand side as well, especially from domestic investors, whether institutional or retail, there's a lot of liquidity going around.
Okay. Just one final question, Pranav. To the naked eye, it appears that PEs have exited quite a few of their long-term holdings. So, for instance, yesterday, you had Blackstone's cleaning out, selling their 23.5% stake in Embassy. What does data tell you about PE exits this year, and how would it compare with the past?
Well, I think it is extremely important that private equity investors do get an exit through the IPO route. I think that has been one of the long-term concerns. But the last couple of years have shown, and this year in particular, even in terms of block deals that you spoke of earlier, a lot of these institutional investors have been able to get good exits from some of these companies. And I'll tell you why it's important, because, in my view, it's a sign of a maturing capital market ecosystem. I think a lot of these private equity investors, venture capital investors, are providing the risk capital to these companies at an early stage. If I go back to the 90s, a lot of the companies which are coming to the IPO market were coming indeed to get that risk capital. They were still in very initial stages of their life cycle. What you're now finding is that, much more mature companies are coming to the IPO market. They've had institutional investors in the past. They've gone through multiple rounds of fundraising. A lot of due diligence has already happened. Corporate governance structures are in place. So, these investors are providing the risk capital, and it's important that they get the exit so that they can, then deploy that money in newer companies. So I think it's a very heartening sign, and 2023, both in terms of IPO companies and also in terms of the secondary market, listed companies, you've seen a lot of strong exits from PE investors.
Okay, Pranav, it's a very interesting chat, and this space is just overall, so hot. So it's been great to have you on the show, and we do hope to have you back on so we can discuss what's really going on in this market. But with that, it is time for a short break on the show. On the other side,